This is a Market Week Stock Market Brief. Tomorrow is an off day for me, March 21st. I do that about once a month. And my members had suggested that on the weeks that I'm going to be off, I just do a brief analysis on the stock market. So trying this out, hopefully you enjoy it. And this catches you up for the week on our analysis. And then we'll be back with you next week, the whole team. So this is the stock market brief. Before we get into the stock market, just a reminder that we're running a level 3 special offer for first-time subscribers and upgrades. This is education, analysis support for active swing traders, option traders, even for longer-term position traders. We have just an unbelievable amount of information. You don't need any special software to get level 3, and you'll be able to view all of our analysis. Just amazing stuff. And this is 35% off for the first 3 months. It's $232. It's only $77.33 a month versus the regular $119 a month. If you have any questions, you can write to Matt at askSlim.com. This is everything that's included in there. That includes our Future Speak video and our whole library of videos. There's over 1,000 videos in there. And our Slimulator momentum indicator, our market condition monitor, cycle load timing tracker, everything that's in members levels 1, 2, and 3. So this is fantastic. And all you have to do is go up to the askSlim website, to the top up there where it says special offers, save 35%. There's more information there for you to see. And if you want to sign up, the link is there. And again, you can write to Matt at askSlim.com. All right, stock market brief. We're going to look at the stock market. This was a week that we had expected the market to make a bottom, to have a short-term trough, as we say, and then begin to the move upside. The bottom came a few days earlier than the ideal. Generally, it's a few days one way or the other from the ideal low timing that we expect. And so we call this pretty much on time for this upside move. And we're going to look at what happened in the markets. We're going to start out looking at the VIX, and we'll look at the S&P 500, NASDAQ, Russell, and also we'll be looking at our proprietary market condition monitor, which is a great way to understand conditions of the market. This is a week, as we said, that we expected a low to come, and we did see that, and it coincided with the anticipation of the Fed meeting. The Fed meeting came out, and they were cautious about the fact that inflation could be moving up based on the tariffs, and held their interest rates at 4.25%, and still expecting 2 cuts in interest rates this year. I think that's probably in line, or it might be more cuts in interest rates this year, because I think that early part of this year, still into the summer, there's a possibility for a pretty sizable move to the downside in the stock market, and I'll show you that right now as we get to the charts. So we're going to start out now looking at the VIX. This is the VIX weekly chart. So the half circles on the bottom, or we call those cycle brackets, that's just a drawing tool and helps us understand the market rhythms, the heartbeat of the market as money comes in and out of the market. Of course, this is the VIX, so it's inverse to the stock market. As we were getting into this period right over here, which is the bottoming zone right there, and there's actually 2 lines because we're accommodating for the potential that 2 different short-term patterns that I'll show you in a minute could continue to give some support to the market. So that would mean that the VIX would be coming down. So there's an expectation, that the stock market would rally into sometime maybe early April or late April, depending on which of those bottoms come on the daily chart in the VIX. We'll take a look at that. And this was perfect. So the index rebound is right in this time frame right over here. as these cycles come down, this would be where cycles in the stock market are going up. So there's a really nice alignment of that. But then when you get right over here into the late April, early May, and June period, this is where there's a period of risk right in here for the stock market, where VIX could easily get up to 30, 40, 50 during that period. So this is what we are expecting. That the stock market would get a rebound, implied volatilities would come down because there's less demand for insurance, so the put prices go down as the stock market rebounds, and that's what causes the VIX to go down. Here's the daily chart in there, and you can see in here this cycle points to around March 26th, right around the end of March, for this pullback in the VIX, and then another rally in the VIX. So that says the stock market pulling back. I'll show you how that aligns. And then this trough over here, which is end of April, and that's why I showed you on the weekly chart, there are two possibilities there. The market could rally into the end of April and then have a very sharp downside move May and into June there. So that's a look at the VIX, and it shows you how that aligns with the expectations that we had. Now we'll get, as we look in these indexes, we'll take a look at the market condition monitor also. So here's your market condition monitor right over here. And this is, of course, included with our level 3, and you get our built-in algorithms on here. Just move this down so we can get the Dow in here also. And now we're looking at the intermediate. You could see the intermediate is slightly bearish to bearish. There, the IWM was the one that was the worst. So that's intermediate. And that's a significant weakening from the bullish readings that we had for the intermediate patterns on the indexes. So this is the, let me just go back to the weekly chart to start out. And these are the cycle rhythms in here, and you could see this big harmonic family. That's what we call it when you have a minor and a dominant. That brought that sell-off over here and over here. This is the one last year in October. We were looking for about a 6% drop, and it only came to about a 3% drop. Mind, I had a lot of negative comments based on missing that one, looking for that to be a deeper break. But of course we didn't miss this one, and this period of risk is April to June. In other words, this rally over here that we're seeing has a lot of risk of failing. Momentum in here, as you could see, our reversal scout, that's a level 4 indicator, but it is reflected here on the MCM, as you see. So that is looking at the potential for sizable downside move. The best we could see if this rally got a little stronger is coming down and testing this low at 54.80. But this is a strong possibility here at around 5,100 on the S&P 500. Look how it hit the top of that zone right over there and near the monthly 23%. That would be a spot where we would have expected the bounce to come, and it did so nicely. Interesting that this is the area that I thought would be for the low for the year when I did my report back over here in January for our members. And now, of course, I had to downgrade that based on these patterns, looking for the low of the year, more like around 5,100, though it could come into the 78.6% right there and get some support somewhere between 53.40 and 52.15. So anywhere in here is where we expect that drop to come. And then, of course, over here is where we expect the next positive time frame to come out in this July-August period. So the springtime looks really bad, and then the summertime looks better. So that would, yes, probably give a good buying opportunity. But if it falls to 5,100, there's going to be a lot of pain in there. People are going to suffer for that one. So that is a look at the weekly in the S&P 500. Here is the daily. Now, you can see in here, this is the MDY, and it's been a great indicator for us. Looking at the S&P 500 with two different cycle rhythms in there that we see. Or two different cycle periods. And this bottom came in here on 20 days. So what does that mean? Well, it means that you can see this cycle bottom came 21 days from the previous one. This one 21 days, this one 20 days. So there's a really good rhythm going on in there. Again, if you want to learn cycle analysis, go to askSlim.com, go up to the workshop tab. There's a great free video there and a lot of information for you to start the process of learning this type of analysis. So we expected 1, 2, 3 cycles to be rising up in here, and that give us a rally to this level, 57.50-ish, 58 and a quarter-ish. Those are the potential upside moves that we see in here for the S&P 500 before it moves down again. Now, this could be a pretty choppy area in here because it doesn't have to do that well. And of course, if it gets under this level right over here on that cycle low, that would be a horrible thing. That puts you into that decline that we expect into the late spring already. I don't think that's going to happen. I think it's going to keep chopping around in here, get up to the resistance, have this first little pullback right in here, try the upside again. And that's kind of a choppy range-bound area that we expect in here that may very well be, 5,600, 5,800 in the S&P 500 getting nowhere, just digesting this decline before the next decline comes out over here. So this cycle here pointing to May 9th as a potential low, as this one's around May 11th. So there's a possibility this fails and that big decline comes only into early to mid-May. So we don't know exactly sure how that's going to line up. Notice in the bottom here our option bias indicator, and it turned negative over here, and this was giving, when it's orange, it's a bottom warning. It's telling us it's getting extreme oversold, and that worked very, very well. Next chart is extremely interesting because this puts together on a 2-hour chart everything I just showed you on the daily chart. And you can see how these alignments come, and these are what's called envelopes. So we're enveloping that right now, which is what JM Hurst taught to do in the book that I first read, Profit Magic of Stock Transaction Timing. And you can buy that book used. It's been out of print for over 30 years. So that's the book where I started to learn this. Of course, our method has evolved from that. And you can see in here the minor cycle and how we projected that in there. So you have this minor cycle coming up here, the dominant cycle right there, and it's giving the lift that we're looking at to maybe this area of 70, 57, 50, 58 something. On the upside. But again, you could see that minor cycle that could pull it down again. So it's following these patterns exquisitely. If you look over here, this is what we look at. This is the slim ribbon PO, and that was giving you these negative signals and downside resumptions. And here it turned neutral, and right over here it's turned green. So that's what we were looking for to give us an indication that that trough that we were looking for on the daily chart has actually been established. So that's a good signal for us. Now, why am I not super bullish right now? Well, it's because we have conditions of momentum in here that are still negative on the daily, very negative here on the longer term weekly. And when you have that, the upside is limited and the downside can resume in a very powerful way. So that's that S&P 500. Let's go back here and let's look at the NASDAQ and the X. And you can see right in here, as we blow this up, this is pretty identical to what we were looking at in the S&P 500. Again, the downside could be very severe, looking for the potential for it to come down into this area here. We'll call it 18,000 down to about 17.8 right in this area, and then an extreme level on the bottom here if these things go into free fall. This is the monthly 38.2. This was the monthly 23, so you can see how it got down to that level. And it's pretty reasonable to expect this around 18,000 or a little lower. This is a panic sell if it happens to get down to about 16.3. Down to that level. That's not really what I'm looking for. I'm really looking for this area of supports to come out into this May time frame. So you can see this is early May down to this one here that aligns with that VIX that I was talking about. So this is really a good way to get a good handle on this market that says that the rally that we're in right now You just have to be very cautious about it. So this is a look at the NDX on the weekly. Notice the negative momentum over here. Notice over here as I switch over to the short term, you can see in here, these all went neutral. So you see those up arrows, they were very negative, and now they have gone to neutral. So we're in this period on the short term of a rally right in here. Still momentum very negative in there. The bottom warning that came here on the OBI, the option bias indicator. Let's just come in closer so you can see that. And the potential rally, we're just projecting up here to about 20,300 in the next week or so, or a little bit longer. Remember the same thing. You could get a rally up in here, a pull back into this minor cycle, and then move up again. So this is a good look at how the weekly right over here is negative, how the daily over here is negative, but in a bouncing area. And let's look at the 2 hour. So the 2 hour was in this downward decline right over here. It broke out of that downtrend, as you can see, and then got over here where the our slim ribbon PO, which is very important, has turned green. So you could see the up arrow right there, and that is a good thing. Now you see here where this went negative, down over here, this is the market condition indicator. This is really, really bearish. And what it says when it's down over here is that while you can get a bounce, that the longer term energies are still pushing down very hard. So you're getting a rally while the longer term energies are pushing down, and that is a negative thing. That's what happens when you get oversold, as we got on the OBI, as you could see right over here on the bottom warning, and you get this bounce in here, and then the bounce doesn't last long and it begins to fail. So that's a look at the NASDAQ. Last one we'll look at is the Russell. Now the Russell's been, and the MIDI, the Midwest stocks, I'm sorry, the mid-cap stocks have been really great guides. So you can see in here where that bottom comes in. There is a cycle trough in early May also on the S&P and the NASDAQ, and that's why we have this secondary low over here. So you can get a bounce in here and then come around and test or slightly take out these lows and then turn up over here. This is based on the cycle rhythms in here. We may very well see the Russell overperforming the broad market. In other words, the last sell-off being a lot of the heavyweight techs, mega caps, and the MDY stocks that are in those mid caps and in the low caps here in the Russell may have gotten sold out here. Still, momentum is very negative. As you could see, the IWM on the intermediate term is still bearish. So right now we're getting a bounce. If you look at the near term, which is looking, if you're a swing trader for an intraday trader, swing trader for a few days, you can see what happened in here, and these turned bullish. So those turned bullish yesterday, or the QQQ did early this morning. So it just says that, we're going to be in this upward attempt, choppy area, with neutral conditions here really in the short term. So that's a look at the Russell on the weekly. Here's the look at the Russell on the daily, pointing up to, 2115-ish or so in here in coming days. So sell-offs in here we're probably in a buy the dip area in all of these indexes there. And the Russell here, you could see the breakout on the 2 hour and the turn green, and actually an upward momentum signal right there on our slim ribbon PO. It's the only one of the indexes that did that, which then shows you that there is more strength in the Russell than there is in these other indexes. So that's, I think, a lot of value looking at that. That is the stock market brief for today. March 20th, 2025. This is one of the first times we've done this. Again, I'm doing this on a Thursday because I'm off on Friday, and we're experimenting here to see if these little short videos I do instead of the full show are well received here on those Thursdays. And of course, we'll be back with you as a full team next week. So that is the stock market week stock market brief for today. You're new to our site, Well, get acquainted, go sign up for our free information every day in our snapshot, our SIR Lite. And do subscribe to our channel on YouTube. Click the notification bell, like this video, give it a thumbs up, and follow me on X at askSlim. Again, any questions you have, write to Matt at askSlim.com. I want you to be so careful because it is so crazy out there, and I'm always wishing you great trading.